Alright, what's going on, everyone? I wanted to put together a quick video to essentially, I have a couple ideas about like people that start out for trading and, the way to go about it. And really, what I want this one to be about is, why I think, trading with a lot of money is actually a lot easier to do. Um, part of it is it's kind of a catch 22 because you need to be trading for a bit to get a lot of money or to build that capital stack. But by the time you've done that, you're already a good trader. You already have your method figured out. But it's a double-edged sword because if you're not already doing the things the way that you should be when you have the large capital stack, if you're trying, you're essentially trying to defy the odds with a small capital, with small stash to try to get to the larger stash sooner, and it just doesn't work. And so hopefully this helps, kind of essentially just, I guess, rebalance everybody. Because sometimes, it was something that I had to figure out for a while too. It was just like, why am I blatantly making decisions that I think are bad trades based on just hopium, essentially? And essentially how to beat that. And so I'm not really sure actually how I want to map out this video. I didn't plan it out at all. So this is all ad lib. So I apologize for any, you know, any gaps in speaking or things while I'm thinking about, how I want to deliver this. Um, so I'm going to use, this general choppy Bitcoin chart that I have here to kind of show some examples of what I'm talking about. Um, and so really the first take of it is when you're trading with a larger capital stack, I find that it's much, much easier to take profits. Which is, kind of silly because the idea is that, if you let something run up, 5% and take profits, well, if you had a huge capital stack, going to that extra 10% is, that could have just been life changing. Um, but it's the fact that you can be rebalanced by essentially, oh wow, I just got 5% of a $200,000 trade, and it's just like, yeah, that's, I don't have to work for a week or whatever somebody's salary might be comparative to that. And again, it's a little bit of a catch 22 because I always encourage people to start trading with very, very small amounts of money. Um, I mean, like comically small, which is actually going to be a separate video. So don't confuse these two topics. I'm going to try to talk about one without saying bad things about the other one, essentially. So essentially, what I'm getting at is that in this Bitcoin chop here, let me just start to go through some examples, see if this, maybe this is the way I should do this. Let's see, how long have we been in this kind of sideways range? So we're coming up on 3 weeks now. And so we've been in it for 3 weeks. And if you're in any kind of like trading groups or anything, a ton of setups are being posted throughout this entire range, like nonstop. Just, oh, buy this altcoin, short this one, long this one, do all of these things. And it's really just, it's more or less a gamble. There's people that have some kind of an edge to it, it fits their strategy in a manner, but, it's more or less a gamble. And particularly what was happening in this range was a lot of microcap coins. A lot of the really small stuff on KuCoin or Binance were firing off. The problem with that and something, okay. Yeah, so the problem with that is that they're unpredictable. Some of them were firing off and others were bleeding. Um, and so, sorry, I'm trying to think if I really want to go through that example or not. Yeah, sure. I'll close it off without too much detail. And so essentially, let me go to the split screen. So this top chart here is the same Coinbase chart. I just don't have the yellow, triangle drawn on it. Oh, I hate that. I'm not going to do that. Essentially, this yellow triangle, descending triangle that was there. And what I have down here is a small cap on KuCoin. And so you can see that the cursor is hovering on both sides on the top and bottom chart to kind of overlap where we're at. And so essentially what I'm saying is that, like, when you have a small stash, what you're really hunting for is like these small caps. This is what everybody wants to get because it's like, oh wow, look, I can turn say you're starting with $1,000. Okay, you have $1,000 and you hit this one pump right here, and it turns it into $1,500 now. You say that's amazing. I've got $1,500. That's awesome. But if you look at what it took to hit this trade, it's luck, in my opinion. There's nothing. There's no technicals that really help. I mean, you can draw things that are in here and kind of force, oh yeah, look, it broke that falling wedge and it bounced off that and retested and went. And it's like, that's true, it is there. But when you're trading with a larger stash, what you're doing in this exact spot right where this is, Control or Alt V, let's get this on both sides. So I'm just marking exactly where this is. You get rid of this percentage here. And so you're marking exactly where it is. And you're looking at this Bitcoin range that's here. And if we're looking at this top, so we have this support line drawn here at 30,650. Rejected. There's a bunch of chop right here where it bounced above it. This part was actually a bit of a bull trap for it. Rejected, rejected, rejected. And so at this spot where this retest happened, Bitcoin is sitting here. We're at this level. And we're at that level immediately after Bitcoin just ran up, several percent. And so nothing on this chart here should say to, open that trade. I mean, you can zoom in and there's this, this smaller wedge kind of thing here. But essentially what I'm getting at is that, from this top chart, you just don't have enough of an edge to say, I'm super confident that this is going to make this move. There's nothing to be super confident about it. They just fire off sometimes. And I can flip these charts and go to, let me just pick a different one, and we're going to find the same exact spot and see, kind of exactly what I'm talking about. Okay, so we just found the same exact spot on this one. And what did this one do? It just continues to bleed this entire time. And so I'm not sure if that's really a great way to kind of show what I'm talking about, but essentially, in order to nail this trade and make this 40% run up that was here, you're kind of ignoring what Bitcoin's doing, especially that I would probably be, I was probably looking at this saying, we're somewhere in some weird range going on here. But what I'm immediately looking at is that we have, this last pump, no real pattern to trade from. And I know that we have this overhead resistance coming up, and it's just yeah, this is not good enough for me. I don't want, I don't want to just jump, I don't want to dump my whole $1,000 portfolio into this tiny cap that can just as easily, just roll right back over after a pump, just like this one did, just like this one did, just like this one did. Just like that one did, just like this one did. And so you don't want to get stuck in those things. And so that's kind of what I'm talking about, is that if you don't hit these, you say, okay, I've got $1,000, I just turn it into $1,500. If that doesn't work out that way, what you end up with is this bleeds out a little bit, and it probably comes back down to here, or comes back in the pattern, wherever you might put your stop loss. But essentially you get back to this spot where you're saying, okay, well now I'm back on support, so I'll just hold it now. And it's just you're now down to $900. And so you've taken a small portfolio stack, made a risky move in hopes that it would work out, and you're making your portfolio smaller. And so the reason that I say larger capital is easier to trade is because you don't try to chase those things. Because your 5 or 10% moves are so significant, you wait for them. You're okay with it. And so this white pattern here is actually exactly what I was charting. And so your mindset also changes with larger capital. And so one of the things that I was preaching through this whole thing is there are altcoins that are firing off. That's absolutely true. And I had said a few times that I'm really not interested in trading them because it's kind of unpredictable. Some of them are bleeding out, some of them are pumping, and it's just you don't want to long or short that and just get stuck on the wrong end for quite literally just a game of chance. And so what I had mentioned was that in this realm, I'm only trading Bitcoin and Ethereum, long and short. Whatever pattern shows up, I'll trade it. And so that's exactly what this was here for. And so what I was actually trading, let me put it on the bottom here, in this case was a Bitcoin down token. And so, again, not trying to get crazy rich on these things, but, you know, we have this retest that's, I can probably zoom into this, but this retest that would have been right in here. I won't even mark the very top of it. I'll say that you know, let's just say I bought in a little bit early to it. And that puts us here. And so what this looks like on the bottom one is this line right here, and that's our retest inverted. And so this is one of the things where, you know, I was in this trade again for a very short period of time. Because conditions are pretty uncertain, you know, you never know where things are going to go. But we'll say it was about a 2-hour trade, just a quick drop, said, you know what, that's great, in and out. And so what that equates to, you know, was a 9% move over here. And so that's a 2-hour trade, you know, a great pattern. This is a 15-minute chart, but you could see this pattern on probably a 1-hour or 2-hour kind of trend. And so it's pretty strong. Again, I did not ride it out until a measured move. Definitely could have ridden it lower, but it's one of those things of choppy conditions. When you use a larger stack, you buy in on something you're certain on, it makes the move that you want it to do, just that first impulse, and you back out. And so realistically, what I was probably doing in this spot was moving down to a 5-minute chart, just saying, okay, you know, we had a pretty quick pull down. I was probably anticipating actually a higher retest to come back up to this support line. And so dropped down a bunch, backed out, and said, you know what, I'll take I'll take this 9% that I got down here, and I'll walk away with that. And so even at $1,000 stash, you know, that turns into $1,100 now. So the next pattern you're charting, you've got $1,100. But the other side of that equation is that these tiny small caps, you cannot put big money into at one time. That's probably how this got started, as somebody bought too much and then bots started buying it up, and then it got shared, and, you know, things just escalate that way. But if we go and look at this down token, I mean, you can dump a ton of money into these. And so instead of it just being, you know, $1,000 move, this is, again, kind of the mindset of when you get to a larger portfolio, these tiny cap coins become harder to do because you have to actually accumulate. You have to actually buy in small amounts. On a move like this that you're watching pretty small and just saying, you know, I don't want to sit on my hands, I want to make a trade, you know, you just throw, I don't know, $100,000 into this right here. You get your 9% move and you back out. And it's 2 hours and you just made $9,000. And so you make those shorter term moves because the big percentages just don't matter as much because you can do so much with smaller moves. And so what that means is that, like, this kind of strategy where, you know, you're charting this pattern, only trading a large cap that's predictable, kind of a Bitcoin, Ethereum in this case, you're making moves that you're finding the confluence that you need, and you're waiting for the right time. You know, you're saying, I'm going to buy right here, and it's going to get this impulse move, and then I'm done. You know, I'm not going to ride this down. You know, I'm not going to try to hit range low down here. You know, we'll get the small move, take it, and leave. That's something that people don't tend to do with smaller stashes because it's, you know, you're not interested in 5 to 10%. It just doesn't seem appealing because, you know, why do I want to turn $1,000 into $1,050? It's like, it's such a small, you know, is it worth my time? It made $50 today. It's like, yeah, it's, you know, it's not great returns. It doesn't sound appealing, but when learning to trade, you have to focus on the percentage and not on the total net gain, because that is the quickest way that you're going to turn a small capital stack into an even smaller capital stack. And so one of the other things that I do want to mention is that as you start to get a larger capital stack, you wait for the right times to buy in. And so this is not shown on this chart, but this move here was deemed to be a bull trap, and I did actually trade some Bitcoin up on that. And so on that spot, I would have bought in, right? And this candle here. And so this was the same thing, a quick in and out, but, you know, it's something that equates to, you know, actually this one seems small. I remember getting like 9-something% on this one as well. And again, it's a smaller trade, but, you know, it's essentially not trading any of this because the pattern didn't make sense. We had a quick drop below, regained support real quick, and that's a great sign to say, okay, quick impulse move. Let me make a trade here. And so one of the things that ends up happening once you start trading with larger amounts is, oh, perfect opportunity for a pun here. Instead of being a jack of all trades, you actually end up being, a master of some kind. And so you focus on the things that really make sense. We're in this market condition that says, I don't trust these small caps because some are, even look at it right now, minus 16, plus 14, minus 12. 4, 3, a bunch of them are just stale, 9, 14. It's like that is not a ratio that is appealing. The risk just doesn't make sense. And so in that sense, you look at it, and this is exactly what I told the group. Look, this is that, market conditions are hairy. I'm going to only trade patterns I'm sure of, and I'm going to take fast profits, and that's going to be it. So probably the smartest thing I could do is just actually not trade. But I have a hard time staring at charts and not trading, and so here we are. But again, through this whole 3-week train here, not price range, through this whole 3-week train, I had probably ended up making, I want to say maybe 4 trades kind of throughout the whole time. And again, all of them were a Bitcoin or Ethereum up or down just on, basically patterns like this. And I believe all of them were shorts because I don't think that there were many great bullish patterns showing up in here. You can actually see that a lot of the patterns would kind of like, kind of trickle sideways, quick dump. Trickle sideways, quick dump. And so as these would regain, you'd get a little bit more of a pattern that would show up to actually trade. It was all the moves down were very fast, impulsive moves. And so I'm not sure if that clarifies anything at all, but hopefully it makes a little bit of sense. And really, I guess the point that I'm trying to get across with this is that trade a small bag like it is a big bag, because that's how you get there. It takes a while, but it's how you get there. Otherwise, you're doing things that are stressful and frustrating, and they don't make sense. And they don't make sense, but for some reason we keep doing it as traders. We have our best interests in mind. We just don't know how to do it. I don't know. I might add to this video later. I might remake it. I'm not sure. But for now, I just wanted to get it out. Hopefully it makes sense.